Hello everyone, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here's some important announcements for the upcoming trading week. Now, of course, as we all know, these markets are incredibly choppy, a lot of it driven by macroeconomic stuff, also geopolitical with what's going on in Iran, and that story will probably not change going forward. As far as the earnings front goes, we like to start there. It is a rather quiet week, even though you see a pretty large number on your screen. We do have 621 companies reporting earnings this week, so it seems like there's a lot, but honestly, there's not a lot of big names on this list. Monday, there's really no one to speak of that's important. On Tuesday, you have GameStop and KB Homes. Now, the reason I put KB Homes on here is because we've seen last week the new home sales numbers was very disappointing. And if that number continues to slide, and we see the 10-year yield surging on Friday, just tremendous move up in the 10-year yield, we may see further pain here. So quite often when we present these topics, it's not just about what can we look for as a buying opportunity, but there may be some shorting opportunities as well, as certain industries may suffer from a rising yield or a falling dollar, whatever the case may be. It's all about putting all these pieces together to find opportunities. Now, moving on to our Wednesday calendar, we have Cintas, you've got Paychex and Chewy. On Thursday, nothing. There really is nothing. There's some smaller companies, but I decided not to put them on here just because to save some space. And Friday, they were supposed to report last Friday, but Carnival Cruise Line will be reporting their earnings announcements as well. Okay, so the earnings calendar was rather light. Not a lot of really exciting stuff here. So what's going to move the market? I mean, we had some wild announcements last week. We had seven rate announcements from central banks around the world. Only one of them was raising rates. That's Australia. And all of a sudden, the tone on Wednesday when the United States made their announcement to keep rates the same, the tone was maybe not as many rate cuts this year. I'm on the record as saying, I'll put a date down as when I said this is about a week and a half ago, that I believe we are not going to see any rate cuts this year, even though Jerome Powell and the Fed said we're going to get one. I actually think that we're going to get a raise this year. It all has to do with conflict, which we'll talk about here in just a second. All right, let's move on to other pieces of economic data. That's going to be the services and manufacturing numbers coming out for not just the United States, but most of the world. We start things off across the pond with France at 4:15 a.m. Eastern Time on Friday. Moving on to Germany at 4:30 a.m., followed up by the entire EU, and then moving on to England at 5:30 Eastern Time. Who's next? Well, that would be us, the good old United States of America. 9:45 will be making their announcements on services and manufacturing numbers. Of course, that's just giving us a general sense of the health of each one of those respective economies, which may give you some investment opportunities. Okay, so let's talk about the really important piece for the markets going forward, and that is volatility. What we've witnessed with what's going on in the Middle East with Iran and trying to get new partners into this and more attacks on boats, and whether you are for the attack or you are against the attack really doesn't make a difference as far as your account goes. Certainly we can have personal feelings about it, but that doesn't have a time or a place here because it's all about opportunity and what does the market give us to capitalize, to either make profits on or take some losses on. So volatility will be the most important piece for the week, and of course all of that is going to be revolving around the Straits of Hormuz. How long is this closed? The longer the Straits of Hormuz is closed and the more intense it gets there, if they start attacking more vessels, I would expect more pain in the equity markets. I would expect oil prices to surge, considering that 20+% of the crude oil supply for the world comes from the Straits of Hormuz in the Middle East. But there's also many other different products and services which are going to be impacted by this. So keep your eye on this Iran conflict. I think most people would like to see it resolved as quickly as possible, but historically when dealing with the Middle East, these conflicts tend to drag on and on and on. And the longer it does, the more pain it puts on our economy. And we saw recently, especially last week, that S&P kind of rolling over a little bit for the first time in quite some time. Not an aggressive sell-off, but a slow rollover as it feels like a little bit of lack of confidence. Not to mention that we had some of the Magnificent Seven stocks get a little bit of a shock, particularly with SMCI on Friday with a federal investigation that is selling NVIDIA chips and their products to China, which were previously banned. So lots of turmoil going on. I think the big thing for the week is going to be whatever conflict happens in Iran. And as a long-term trader, someone who's been involved in these markets for over 30 years, the safest thing to do right now would be to scale your trades back just a little bit. If you normally trade 1,000 shares at a time, maybe go to 500. Just go back a little bit here because the volatility can be tremendous. As we saw this week, we started with a gap down in the equity markets, had a huge rally up until Wednesday, and then Thursday and Friday came crashing back down. Extreme volatility. I don't expect that to change at all. So that, my friends, is your Monday Morning Must Knows. Lots of volatility on the horizon. We will see you next week.